Good morning. This is Ken Long at Tortoise Capital with a review of the daily trading plan for October 13th going into October 14th. Still bullish normal. Low end of neutral on a 10-day basis. You can see we had a slight recovery today. Still some channeling and overreaction signals in the primary ETFs. Tradingness is continuing to increase, but with bears still in charge. The volatility index, the risk Z, rolled over into the red, highlighting opportunities on the short side for large one-day range moves. Lots of channeling and overreactions in the extended ETFs and large caps. Some good pattern trades here in the 5DD, the 551Ws, especially in the area of tech. And materials with Caterpillar. Lots in the auto framer to choose from as well. United Health at 5.1 to 1 on the auto framer. Walmart had some strong follow through today. In the ETFs, metals and mining, precious metals especially, 8.5 to 1 in silver and gold, 2.5 to 1 in metals and mining. XIV was a big loser today, off 3%. Again, a lot of auto framers to choose from. Brazil had a Brazil series and a Mexico series today when we look at the charts of interest. Here's the auto framer key price levels. Walmart's still on the list. Caterpillar, Russell Small Cap IWM at 2.4 to 1. Among the daily squeezes, Caterpillar and Treasury. So let's just take a look at Caterpillar real quick. All right, so these are dailies on Caterpillar. It's been in a nice uptrend. It's had one long leg up and some consolidation, a second leg up. And now we've had an RLXD outside the river. The dragon is rolling over. It's starting to shape up for an owl to the south side. And then today, you'll notice it opened, a sold off, and then closed right back at the top, at the high of the day. And so the small range on this sets up a really nice one-day pop, or what I think of as the squeeze play. See a lot of things going on here. A retest on the upside, you could be entering around 87. So if we got an entry inside yesterday's range and took that out by a nickel, the upside opportunity is up here around almost at 90. So you get $3 on the upside. And then were this to fail, coming back down here to about 84 and a half, you get $3 on the downside, and yet the range risk is really only from 86.40 to 87.20, so maybe 80 cents. So you've got $3 on the upside, $3 on the downside. On an 80-cent risk, you're talking about 4 to 1, and so we're right at this key price level right here, where there was a leg up. And you can see that you get some amazing one-day moves in Caterpillar. And so that makes this small range day very attractive because you have a clear indication of price directionality if it were to get higher than yesterday's high or lower than yesterday's low, with the possibility for a $3 move really in one day. And so we would set this one up to play in either direction and go in the direction of price, looking for a one-day harvest. And if this doesn't hold, coming down to the RL270 around 83.5 is the downside target. Now when we look at Caterpillar on a 2-hour, you can see that this long slide back to the RL270 on 2 hours has been achieved. And then today was an opportunity for it to fail, but for 4 hours it didn't fail. And so instead of coming back down here, it held support. So now if we were to get an open near the close So somewhere around, I'd like to be entering somewhere around 87.10 to 87 and a quarter, all the way up to 87 and a half, where it would come through the dragon, with the idea that it's going to come up and test the hump of the baby dragon here around 89 and a half or 90. So that's the intraday move that I see that's possible on the upside. And then were this to collapse, you can see it coming down here to 84 in a orderly slide as well. So this is a nice critical state, and the fact that we had a double bottom and now higher lows, and it closed well in those last 2 hours, and resting on support, to me is an attractive location for a reasonable critical state trade. All right, so here's a morning series from EWW. That's one of our frog champions, and so on a day where there's a big gap down, I'm expecting big follow-throughs. It was a target of interest for me, and so we had an open, a sell-off, and now about 20 minutes in, it's rolling over, and this is feeling like a collapse as it comes through the dragon, and I'm short here with a cover here as the RL10 comes through the dragon, stop and reverse, cash a piece, trying to get short here again because we have a hump, a lower high, and I'm thinking this is a continuation down to test this level. It doesn't, gives me a 1, 2, 3, so scratch, stop and reverse, and then this really had no follow through, couldn't even get as high as here, so I've got a short side bias, but because I felt kind of chopped up in here, I needed a break to get back to the zero state, so I didn't stop and reverse here. About 15 minutes later, I was back in the zero state, and now I see this as a head and two shoulders and a higher high. It gets to the VWAP and fails. The dragon never even really recovered, so this is a natural short for me as it's breaking through the belly of the baby dragon here. So short with the cover, stop and reverse, and then cash at the RLXD in the usual place. And now an EWZ trade in the afternoon. I had spent most of my time fighting my way through EWW Mexico and didn't get this move here. I was fully occupied with EWW. When I broadened my focus after lunch, the lunchtime doldrums, sideways quiet channel, and now I'm working on 5-minute bars here. So this becomes the pattern 5, sideways quiet channel breakout. Easier to see it on 1-minute charts, but on 5s, you can. This is much more orderly. And so here's the pattern 5 breakout. We've already had one leg up, consolidation. The 30 is still up. The river is up. The RL270 is rolling and going up. So I'm long with a stop down here by the Bollinger Band mean. So 20 cents. And then an orderly move coming in towards the afternoon. 1, 2, 3 exit. RL10 coming through the dragon, and that felt pretty good. And so that's a move from 56 to about 85. Almost 30 cents on a 20-cent risk. 1.5 R in the usual way. So that's Ken from Tortoise Capital. Keep your risk measured and your powder dry.